You saw the title, you know what this is. What are fair value gaps? So, fair value gaps are one of the most fundamental things you need to know in trading. They're super easy to learn, and they're something that can really help you when it comes to looking for positions for entries and helps with a lot of manipulation. So, I'll get into it. A fair value gap. The easiest way to know what a fair value gap is, it's a place where price is lacking orders being filled. Price where a place where price is lacking orders being filled. So what do I mean by that? I mean, the way price moves is it moves in orders being filled and not filled. In our last video, we went over liquidity sweeps. Liquidity sweeps are an area where price has the opportunity to change. In order for price to continue its trend and keep moving, orders need to constantly be getting filled. And I want you to pay attention. Fair value gap. Gap. We're looking for gaps. It's in the name. All right. So I'll draw one out and then we'll go into the charts with it. We're having an uptrend, right? Like this. Okay. Boom. Uptrend. We created a high. So that's a high right there. We created a low. We created a high. We created a higher low. Right. So this is our fair value gap. I'm sorry. This is our trend. We're in an uptrend. So let's find a gap. Where can we find gaps? In between candles. Right? That's a gap in between a candle because that's between this high and this low. So what would we look for? We would look for price to start trailing down, get a small fulfillment, and then move up out of it. Right? Fair value gaps can be really strong. Fair value gaps can be really weak. The way I like to use fair value gaps is with a equilibrium in play. What I mean by that is like this. I'll draw one out. I'll actually, you know what? I'll find it on the charts for you to be even better. Let me draw it out real quick. Right? And then we mark out our fair value gap right here. So price can come down and price can wick into that. By the way, this is not a real example because if this fair value gap is this low down here, I would honestly look for a smaller 1 minute one to the upside, but we'll get into that a little bit sooner in the video, right? I would wait for price to wick into there and then come out. But say price only wicks in that much and then it starts to go like this and it starts to go like that, right? To me, that's honestly not that strong if it wicks in that low. What I would prefer is I would prefer price to come down to there, halfway into the fair value gap. That's not even halfway. Price to come down like that much, halfway into this fair value gap, at least halfway, or at least like 40%. That way I know this fair value gap is being respected deeply. We have a deep retrace. We're filling a lot more orders than just bing bam, instead of just a wick wick, right? That's what I would wait for. So the way we use that is with the GAN box. This GAN box is used to find equilibrium, but I can also use it to find my fair value gap, right? So if we drag this into here, right, like say this is our fair value gap, for example, my strategy that I use is coming down past that 50 percentile and then coming up out of it. That's my strategy. That's how I know I've had a deep retrace and I have good entries. So let's find one on the charts for you guys that I can show you. This is 15-minute time frame, and before I even mark it out, take 5 seconds. Pause the video if you need to. Do you see it? Do we see it? If you said this fair value gap right here, you would be correct. If you said that right there, you would be correct. From the highest point of this candle wick to the lowest point of that candle wick, what did we do? We came in. We filled orders right here. We wicked into it. What did we see? We saw an extension out right there. And this helps our strategy. You know why? Because if we draw the GAN box from here to there, what do we see? We actually tapped that 50 percentile mark. We tapped that 50 percentile mark. We tapped. Well, we didn't actually tap it. Hold on. Yeah, we didn't fully tap it, but we got close enough. We got 45% of the way there, right? So this is a nice deep retrace into that fair value gap where we hit the middle line of it. That's on 15-minute time frame. We could have used that as our entry to enter our trade. Also, let's see why we ended up doing that. Well, as you can see right here, what do we have? 15-minute low. What did we do? If you guys remember from the last video, we swept liquidity off the 15-minute low. What is lacking in this right here? In this down spread, what is lacking? Orders. Orders being filled. So what do we have to wait for? A change in trend. Orders got filled. But what do we see specifically? No fair value gaps. There's no fair value gaps in this move, right? Because, sorry, this is going to get a little technical. I need y'all to pay attention. We have the liquidity sweep off this low. If you guys remember from the last video, go recap on that if you need help. Go take your notes, right? We swept the liquidity off this so we can change trend. Now we're moving to the downside. But as you can see, there is no gaps in between each candle, right? We take the highest at this, highest that, no gap. Low of here, right here, really small, tiny gap, right? Take this to this, no gap. Take that to that, no gap. Take this to that, no gap. Take this to that, no gap. Take this to that, very small, tiny gap, right? So those tiny gaps can easily be blasted through, right? The only way we need price to start moving down is if we come up here and we use this as a liquidity sweep to the downside. But we have all this volatility. We have all this volatility on 15-minute time frame going down. We can look for a change of trend, which we did. We got this. But can we enter right here? No. Why? Because we don't have a retrace. So what do we wait for? We wait for a fair value gap. A fair value gap is a confirmation confluence. Write that down. Write that down. Okay, I'll say it again. Write that down. A fair value gap is a confirmation confluence. It is a confluence that helps us confirm our trend. It's not a confluence that changes trend. It can be, but it's not. And so it's a confirmation confluence. The only way a fair value gap can be a change of trend is an inversion. And I'll try to find an inversion to show you guys. But now let's stick to the bread and butter. Let's go with the fair value gap. The inversion for value gaps will be in the next video, I promise. Right? So look. So we're moving down. We get our retrace. Now from here, we can look for setups up. We can look to take profit that high, and we can look to take profit at this high. Right? That would have been a good trade. And then we set stops at this low. We gotta wait for the fair value gap fulfillment. Okay? That's what I mean. Fair value gaps are confirmation confluences for us to find a way to keep moving in the direction we want to. Okay. That being said, let's find one more. Let's find two more. I'll show you guys a good amount more. Found one. Did you guys find it? Nope. Well, if you did, then you would know it's this one right here. Now, I wonder what you might guys be thinking. Shavesh, there's no candle wick right there, right? But there's still a gap. There's still a gap in between these candles. What do? We waited for the retracement. Let's open up our GAN box real quick so we can see if we hit the 50 percentile. Didn't hit the 50 percentile on there, but we had a deep enough retrace. We could have entered off that, right? But the reason why I like to stick to my strategy with the 50 percentile for sure, if not more, is because boom, look, we came in, we retraced into the 50 percentile, and then we started moving a lot higher out of it. Okay, now if you guys might be thinking, Javesh, okay, look, we have this gap. Why did price not want to move higher? Price did not want to move higher because, well, we traded into it. We made two green candles right here. We came up a lot higher. But look, guys, there's another gap. So what do we have to wait for? If we wanted to move up higher, we'd have to wait for price to come in here, come through there, and then we move a lot higher. Why is there a wand? All right. That's inversion for value gaps. That's a little complicated. We'll make a separate video for that. But for now, let's look at this. Let's look at this, right? Boom. Filled. Boom. Move out. We can fill in 2 candles, 3 candles, 4 candles. As long as we're still in the fair value gap, it's valid. The only way the fair value gap is invalid or it got respected is one, if this red candle was to come down and was to close right here. If this red candle was to come down and was to close right here and we start moving down, then it's invalid. We can't move up anymore. If this green candle poked in and closed above here, it's valid. We can move higher. Okay? Those are the only ways fair value gaps are confirmed and disrespected. If a candle shoots all the way through it, no good. If a candle taps into it and moves out, good. Right? That got respected. Disrespecting fair value gaps can be used in our favor in inverse fair value gaps. But like I said, going to be in a separate video. Let's find one more fair value gap just to explain this a lot more simpler for you guys, and you guys aren't as confused. Let's head over to let's head over to 1 hour. Maybe we can find a nice one on 1 hour. Nice fair value gap that got respected on 1 hour. Well, there's this one right here. Price tapped into it, moved up a lot higher. Right, but I want to find one that's in the trend. Okay, can't really find one on there. We'll move to 5 minute because 5 minute time frame is where most of our confirmation confluences take place. As you can see, this price action kind of sucks, guys. Pretty much sucks. Okay, found one right here. This big green uptrend, right? Fair value gap here. Fair value gap here. Fair value gap here. What does this mean? This means that I'll put on the drawing tool. If the candle, like this red one that tapped really deep into it, if it went boom and it closed right here, do we immediately, oh no, didn't get respected, do we short it? No, we don't short it. You know why? Because we have this fair value gap and this fair value gap. So what does that mean? When we have fair value gaps stacked up, when we have stacked up fair value gaps, it means all of them are valid until the very bottom one or the very top one. What do I mean by that? This is the very bottom one. Price fully has the opportunity to come down, respect this, and then move up out of it. You know why? Because price wants to manipulate as many people as it can. Price will honestly might want to shoot down into this one and move up. Price might want to shoot down to this one and move up. And we just got to be prepared for that as traders, right? This is all valid. This is valid. This is valid. This is still valid, right? Because price didn't come up, we didn't get a break of structure or anything like that to confirm that we're moving up higher. Price could have honestly came down in these two green candles. Price could have continued this downtrend to this one and that one. So what is our fair value gap? Our fair value gap is from here up to there, essentially, right? Stacked up fair value gaps are a little hard to trade. They're a little hard to trade. We got to be really patient as traders with that. So we would have to wait to tap into it. Tapped in real nice and deep. Candle closed up here. So we just wait for a little bit more uptrend. And then once we get an uptrend like this, then we're cool for an entry. And then we can make profits on this little spread right here. Okay. Now, you might be asking yourself, because we had this gap right here, why didn't price want to trade into this gap right here? Well, that's because price already retraced. Price already retraced on 5 minute time frame. Because price retraced on 5 minute time frame, I wouldn't look for another retrace on 5 minute time frame. Instead, I would probably look for a retracement on 1 minute. I would look for a 1 minute fair value gap to get respected. Maybe a 1 minute fair value gap got respected in this move right here. I don't even know, right? So that would be all in all my thought process if we were looking for a fair value gap to trade to the upside after this good amount of volatility. I hope you guys gained a lot from that video. That was me trying to explain the fair value gaps in the easiest, simplest way possible. And what do we have here? Sorry, I'm getting carried away. I'm going to give you a little bit of sauce. Inverse fair value gap. Inverse fair value gap to volatility on the upside. Because price came up, closed above it, This gap is no longer valid to the downside. We can't trade down. Now we can look to trade up. Because we're looking for trades up, we have to look for, one, a respect fair value gap. Boom. Respect fair value gap. Now let's head over to 1 minute. I'm giving you guys some sauce. I'm giving you guys some fucking sauce. Pay attention. Pay attention. Respection. Entry. Stop loss. Motherfucking take profit all the way up here, bro. All the way up here. That's some sauce for you guys. That's some inverse fair value gap sauce for you guys. You'll see that in the next video, I promise. And you'll learn how to take trades like that and how to have that freaking motion. So I hope you guys learned something. Today was a good video. Give you a little bit of sauce at the end of it if you stayed all the way through. Can't wait to see y'all in the next one. Peace and love always. Make sure you learn something, take your notes, and we got to be patient as traders. Peace.